So I've received a question a few different times, whether it's in the comment section of my YouTube videos, I've seen it on Twitter, or even DMs on Instagram. I know there's a couple different outlets you can use to actually reach me, but a lot of people have been wondering, what is my investment style with the market being as crazy as it is? What are the stocks that I'm looking at? They want to know names. They want the exact companies that I'm investing in. So in today's video, I'm just going to lay it all down for you. I'm going to tell you what I'm investing in, my current strategy, and I know I've touched upon it on a few videos in the past, but this is going to get down to the cold hard facts. So let's get right to the video. So I know that a lot of you that watch this channel are actually YouTube content creators yourself. So this strategy might be very similar to something that you're already implementing, strategies that you are using in your investing. So if that's the case, then definitely let me know in the comment section down below. It's nice to have some people just backing what I'm saying. And that way the new viewers that come along, they're seeing this type of content, they understand that it's well known that it is a solid strategy to be doing some of the different things that I'm doing with my investments. So definitely help me out in that aspect if you can. So I understand that the market can be really intimidating, where we're seeing record-breaking drops, days in the red, where it's scary. You open up your portfolio, and whether you have a lot of money invested or just a little bit of money, it is having huge swings, and it turns a lot of people off to the idea of investing. And a lot of people will start turning away. They're turning their backs to investing. They might not continue their strategies. They might not continue investing. They might just stop investing in general altogether. And this is not the best move, in my own opinion, because a lot of these people are trying to time the market. And despite what people out there say, there is no way that you can actually time the market perfectly to buy in at the lowest point and then turn around and ultimately make a ton of money off of that lowest point that you bought in on. There's no way that you can possibly time that market. But just keep in mind that right now, market conditions are not looking too good. But that is completely fine, because if you back your portfolio for the long term, if you structure it to be set up so you don't need to worry about what investments you're making right now, all that matters is where your investments will be in the long-term future, then you are going to be completely fine. And it's actually a good thing that your portfolio is dropping in value. These costs are getting decreased because you can actually buy into stocks at a lower point in time. So you might not have as much expendable income right now. Let's say that you have $50 a week to invest in. So if you're investing in a stock that previously cost $50, you're just going to get one share of that. But if it now costs $25, you can pick up 2 shares for that same $50. And then in the long run, when the stock continues to go up, it turns around, you're just going to be profiting much quicker, and you're going to be setting yourself up in a much better scenario. Now, obviously, it's no surprise there is a big virus that's going on right now, and this is changing the way the economy is structured. It seems like all these businesses are collapsing right in front of our very eyes, but just keep in mind, this is all just created from fear, because people don't really understand what to expect. They don't know what to expect, and I'm no expert in any of this because I myself haven't lived through a pandemic like this before. But what I can tell you is that these huge companies, Apple, Microsoft, Tesla, these big companies that have huge backings are not going to go anywhere in the long run. They might take a ding right now in the short term because of the shortcomings of what's happening. They have to shut down factories. Their manufacturing is disrupted. But I guarantee you that in the long run, or I nearly can guarantee you this, in the long run, they are going to bounce back and go much higher in terms of stock price versus where they were before. And that is the exact mindset that you need in this situation. And that's where I'm coming from. So I'm going to cover some of the stocks that I'm investing in, some of my strategy here, but just keep in mind, when you are investing, when you're looking at these strategies, you definitely want to do your own research. Don't just blindly copy what I'm doing. I'm just some random guy on the internet. This is merely for entertainment purposes. So definitely just keep that in mind. Don't just copy what I'm doing. So you can see my portfolio today actually jumped up right around 5%, 4.91%, a $205 increase in one day. Now, that is because, first off, the market had a record drop yesterday. So if you look at the past week, I'm actually down $569.32. The past month, I'm down $1,100, a little bit more than that. Over the past 3 months, we're down close to $1,000, and over the past year, we're now down just over $1,000 as well. So I'm down pretty much across the board, except for the day, and I'm really not even too concerned with that. Obviously, this portfolio, like I said, for the long term, it focuses on dividends. So even though these stock prices have decreased, my dividend income hasn't changed at all. I'm still going to be getting the same amount in dividends. And what I'm going to be doing with those dividends is actually just reinvesting them back into these companies. So all this dividend payments that I'm getting is just going to help dollar cost average my way into these companies. So for example, my current strategy right now, and I mentioned it on the last video where I opened up a bunch of free shares on Robinhood as well as Webull. So if you missed that, you might want to check it out. You can get some pretty cool stocks from that. In there, I mentioned that what I'm trying to do is just drive my costs down on this ETF right here, which is known as SPHD. So when you're looking at ETFs, it is highly important to look at what their holdings are. So these companies in this ETF are focused on high dividends but low volatility, meaning they're not as volatile as the market. Obviously, this is kind of tracking the market, but it's not going to have as significant declines and as significant jumps in prices if the market goes up or down. So as the market is crashing right now, I think this is a pretty solid ETF for myself to be investing in because it's not affected quite as much. I mean, it's still these big decreases, but what I'm trying to do is mitigate that by dollar cost averaging my way in. And you can see right now I currently own 29 shares and my average cost is $38.72. So if you look at the chart, I mean, I was buying in at this, $43 per share. I was buying in when it was at its highest point in time. So now, right now, my average cost was up over $40 and I've already drove it down to be around $38.72. And today, obviously, I had a pretty solid day, almost a 7% jump. So that is my current strategy right now, is just dollar cost average. Make sure you drive that cost down, and it's just going to prove to be very beneficial in the long run for me. Now, in terms of individual stocks that I'm looking at a lot of the ones that I already own because they're at a steep discount in my own opinion. Now, that's companies like Coca-Cola. Coca-Cola is a very solid company that honestly, since I invested, I haven't been able to get a chance to invest in at lower points in time. Most of the stocks that I was investing in before had just continued to go up and up and up, and now they are finally coming down in value. So I'm able to, get in at a better point in time. So if I was investing, when Coca-Cola, let's see, for example, the last time I picked up a share of Coca-Cola, it was $53.35, and right now Coca-Cola trades for $47.18. So if I was buying in at that $53 price range, then why would I stop investing now when it's $47.18? Obviously, I saw value in it then, and I still see value in it today. Now, these are really solid dividend companies that I do invest in. I believe this is one of Warren Buffett's biggest holdings, and that was one of the reasons that I was turned on to this stock in general, as well as just looking at their financials, how they perform. And Coca-Cola, is just such a dominant player out there, and a really solid dividend company that you want. They are a dividend king, meaning that they have been increasing their dividend payments consecutively for over 50 years now. So that's one criteria I really like to see. So other ways that I'm looking to dollar cost average, I invested in this total stock market ETF when it was at all-time highs, just like SPHD. So you can see that I was buying in, I bought 2 shares at $170. So today this is worth $124. Now this is obviously for the market as a whole. So the market has been absolutely tanking. So what I look to do is be able to capitalize on that, pick up more shares of this, and in the long run, this is going to bounce back and my portfolio is going to be so much better off. Now, just thinking logically about what the virus has been doing, the impact on the economy, I'm looking for stocks that I'm going to see a steep discount in price. So let me just search a couple, for example. So I like cruise lines, actually. If you look at things like Royal Caribbean, so over the past 3 months, they're down 78%. That is a huge drop, and that's obviously because people don't want to travel right now. So this might be a really solid stock to start considering for your own portfolio. So think of other travel agencies, travel, airlines. So if you go, let's look up Boeing, which was already having issues before all of this happened because of their 747s and everything else that was going on there. So if you look at their drop, 61.68%. These are the industries and the sectors that are getting the most effective. So these are the type of stocks that I'm considering bolstering my holdings. I want to get involved with some of these stocks out there, and I think it's a really solid idea to start considering them for your own portfolios. More logical situations where you might be thinking is a lot of companies and businesses are shutting down, so why not invest in a company that helps with meetings when you're remote, okay? So Zoom is a video conference calling company where you can host these offsite meetings, and obviously their stock has been doing pretty well since all of this started happening. You can see over the past 3 months, they are up 65.87%. Now, they are relatively new to the stock market. They haven't even been here, I don't think, for a full year. Yeah, so this is one that's a little bit more risky, but this is a very solid company to consider. Now, I know a lot of people want to be invested in Amazon. Why not take advantage of some of these dips? Obviously, they haven't been as hurt as some of the other companies, but Amazon is one that is dropping in price because their supply chain has taken a hit from this whole situation. Really, the way that I'm seeing it right now is most stocks on the stock market are at a discount, and I get super excited because those are just a few of the cases, a few of the stocks that really pique my interest, some that I really like watching, and I think there's so many opportunities like that out there right now. And honestly, I'm ready to just keep putting more money into the stock market regardless of what it looks like in my portfolio. I get just as excited to receive the dividend income that is my goal, so there's no reason why I shouldn't be putting more money into the stock market so long as I'm safe, I'm secure. If anything happens to my job financially, I could be covered for the next 6 to 8 months, which is exactly where I'm at right now, so I don't really necessarily need to worry about that. So all of the extra money that I do get, I do plan on putting back into the stock market. And in my own opinion right now, I think that the economy is going to keep going down for a little bit. I don't think we have seen the worst that's yet to come, and the reason for that is because I think a lot of companies are starting to shut down completely right now, their operations, and it just started affecting my area where I live right now. I'm just outside of Boston, and a lot of these businesses are shutting down, so that's really going to hurt their profits. Investors are going to start shying away, and that is the time for you long-term investors, people with my mindset, to start buying into these stocks because it's going to help you out so much with your portfolio. So yeah, those are the types of stocks that I'm investing in right now. Those are the types of stocks I have my eyes on, but let me know, what stocks are you watching? I know that a lot of them are at a discount right now, but I always love hearing from you guys, so let me know in the comment section down below. And then if you guys have any questions about this video, about investing in general, make sure you leave them in the comment section. If you did take away anything from this video, please smash that like button. It really does help with that YouTube algorithm. I would really appreciate that. It means more to me than I can even express to you guys. And if you want to check out another video here on my channel, I'm going to link something here in the top left-hand side of the screen, and that is the last video I posted, opening some more of those free stocks and just talking about the stock market conditions. So thank you so much for checking out this video, guys, and have a great day.